Today on Ready, Set, Scale by Co. It's that time of year again, tax season. We'll dive into the pitfalls and the opportunities for prepping your small business books in 2024. We're talking all things taxes with Keith Peterson, co-owner and accountant with River Rock Outfitter. Plus, we'll get expert insights from Ada Vaccaro with Bench Accounting, offering financial mastery to over 25,000 small business owners. And we'll take a look at the stories you can't miss making the headlines on Co. with editorial director Barbara Thau. On your mark, ready, set, scale. Ready, Set, Scale is sponsored by Dell, FedEx, Iron Mountain, Oracle, Brevo, and Bench Accounting. Thank you.
Hey everyone, I'm Jeanette Mulvey, the editor-in-chief of Co, and welcome to the first episode of our new series, Ready, Set, Scale by Co. It's a monthly virtual event series where we'll be bringing you expertise from small business owners and industry experts across all kinds of areas that are of interest to small business. So I'm so glad that you're here. Today we're talking about taxes. And joining me is Keith Peterson, who is the co-owner and financial manager of River Rock Outfitter, based in Fredericksburg, Virginia. He will tell us a little bit more about his business in a minute, but it's very exciting to me because Keith and his wife, April Peterson, were our Southeastern Regional finalist for America's Top Small Business 2023. So Keith, welcome.
Yeah, thank you very much for having me. Much appreciated.
So tell us a little bit about your business, but also tell us about your accounting background because it makes you the perfect guest for this segment.
Perfect. Yeah. So my wife and I own River Rock Outfitter in Fredericksburg, Virginia. It's a specialty outdoor business that focuses on providing quality apparel, quality equipment, and really helping to foster that passion for outdoor experiences in our local community. My wife and I opened the business in 2014, so we're going on 10 years in business this year. So really happy to be here, really happy to talk about this. And as you mentioned, I'm a certified management accountant. So I do spend a lot of time doing the financial management for River Rock Outfitter. And one of the things that, of course, this time of year we like to focus on are taxes.
And I love this because you can talk about accounting for small businesses in general, not just for small businesses like yours. So let's just start with, what are some of the biggest tax challenges your business faces?
Sure. So really with any sort of small business, as you can imagine, you get pulled in so many different directions. You're worrying about your employees, you're worrying about IT, you're worrying about general accounting, you're worrying about customers, you're worrying about growth. So you just have a lot of these different things you need to focus on. So really at the end of the day, when it comes to tax challenges, one, do you do the tax planning required to have a positive impact in your business throughout the year? And then two, do you really know all kind of the technical intricacies of just filling out these forms? Are you filling out the form properly? Are you sending it to the right place? Really, you're dealing with both federal, you're dealing with state, you're dealing with withholdings, you're dealing with unemployment. So really trying to figure out, okay, what is it that I need to do? Where do I need to send it? What are the timelines? And then, of course, at the end of it is, do you have cash in the bank in case you do have a tax liability due? Do you have the amount of cash needed to not only keep your employees paid, but now a surprise tax bill comes and you need to make sure you have enough cash to be able to cover that?
It's a lot. So at its most basic, I think, most small business owners think about taxes and tax planning as just kind of being like, revenue versus expenses. How much do we make? How much do we spend? How much is in the middle? And that's what we pay taxes on it. But it's not that simple. So how do you kind of just generally think about planning for tax season throughout the year?
So really, I look at taxes in two different ways. I look at your quarterly payroll taxes and estimated income tax, and then you look at the end of the year tax liability. So most businesses are going to either be LLCs, sole proprietorships, or S corporation. So all three of these are called pass-through entities. And all that really means is all the income, all the profit that's generated through the business gets reported on the business owner's individual income taxes. So with that, you're supposed to file a 1040 ES every quarter, which is an estimated income tax, an estimated tax liability form, if you will, and pay those taxes on a quarterly basis. Now, as you can imagine, if you're running a successful business, this could end up being a relatively large cash outlay, and sometimes it can be at the most inopportune times. So what we do at River Rock, we've kind of figured out how to minimize those peaks and those valleys and really make it so that if we do have a tax burden, it's kind of spread loaded across the entire year. So we don't really have any of those periods of time where we have a really big tax cash payment that we have to make. We like to spread load it. And a lot of that has to do with how we actually end up paying our owners and paying our employees and really managing both the revenues, the expenses, and the cash.
It comes down to how you pay yourselves and your employees. And that's part of how you are like kind of evening your expenses out throughout the year. So
Absolutely.
Can you just talk about that concept a little bit more?
With these pass-through entities like an LLC or sole proprietorship, basically you take these things called owner's draws, and those are pulled directly from an equity account. And what that does is you don't pay the taxes on that draw, or you don't pay the taxes on that forecasted income until the quarter hits. So that's one of those things where, once again, you could have a large tax payment due. We've taken an opposite approach with River Rock. Basically, our owners are paid and managed just like our employees. So owners get a paycheck every 2 weeks. At the end of the year, the employees get the owners get a W-2. And what that means is throughout the course of the year, with every pay cycle, we're going ahead and doing that federal withholding, the state income taxes if needed. So what that does is that helps us out in a couple of different ways. One, it ensures you as an owner are actually getting paid. As we know, as a business owner, you always think about, how do I keep my business healthy? How do I keep my business alive? And a lot of times you almost kind of forget about actually paying yourself. So this is a situation you can do this so that you can ensure you as an owner are actually getting paid by the business. The other thing that I like about taking this approach is it helps us out with both budgeting, so revenues, expenses, profit, but it also helps us out on the balance sheet side, which is your cash side of the house. So therefore, what we could do is we can now plan for an entire year. Every 2 weeks, this much cash is going out to pay employees and owners. Every 2 weeks, this much cash is going out to pay those withholding taxes, or pay back the IRS for those withholding taxes. So by doing that, it helps even out those cash flows throughout the course of an entire year. And it's proven to be beneficial to us as a business.
Can you explain a little bit more about the difference between an asset and an expense, and how this affects how you think about when to buy inventory?
Most people, and even small businesses owners as well, we always focus on, and this is just because, kind of how everybody was trained. We focus on the income side of the house, the profit and loss statement, where, it's all about revenues, expenses, and profit. That's where we like to focus. But your inventory is going to reside on your balance sheet, so on a different side of the house. And it only gets turned into an expense when you actually sell it. So it's a situation where you can build up those assets, build up those assets, build up those assets, and it never gets counted against your profit until you actually sell it. So for a small business that really focuses heavily on inventory, I always recommend, understanding the theory of the cash conversion cycle. And what this really is, it's just the idea behind, how much, the time it takes for me to go out and buy that inventory. The inventory comes in, I pay for the inventory, then I sell the inventory and I collect the cash from that inventory sale. This is where a lot of small businesses actually get into trouble, because once again, they're focused on, hey, am I a profitable business? They're not necessarily focusing on kind of like an inventory buying strategy. And so once again, what we've done a little bit different is we buy our assets, invest in our inventory, if you will. We spread load that across an entire year. So in our business, basically, we have two different selling seasons. You've got, of course, your spring, summer, and you've got your fall, winter. The easiest thing to do from a planning perspective is lump sum, bring in all your inventory at the beginning of the season. And the idea is you bring it in March and you're going to sell through it by the end of July. Well, the problem is, when buying inventory, you work a lot with vendors. And those vendors are going to have terms like net 30, net 60, net 90. And what that is that's just the amount of time that you have to pay the inventory back. So in theory, you bring in inventory in March, the bill for that inventory, you've got to pay for that inventory by the end of March or beginning of April. So the strategy of buying everything in a big lump sum just isn't going to work for you from a cash outlay perspective. So what we do is, as part of our financial plan, as part of our cash plan, part of our budgeting plan, we look at, strategically looking at when do we need to bring in the inventory at specific times? How do we backfill that inventory through the course of the year? And just really focusing on making sure we never find ourselves trapped to the point where we cannot pay our vendors for that inventory. This is a classic example of being a profitable company, but being cash poor. When you look at the statistics, that's one thing that does drive a lot of small businesses into the hole, even though in theory they are profitable. It's because they actually don't have the cash to pay those expenses and don't have the cash to pay for those assets, i.e. inventory.
So focus on the cash. That is your best advice. Thank you.
Without a doubt.
Please say hello to April for me. I thank you so much for doing this. Okay, next we have Ada Vaquero. She is Senior Director of Partnership and Sales at Bench Accounting, and I'm super excited she's here because Ada is going to help us through a lot of the issues small businesses face during tax season. So welcome, Ada. Tell us a little bit about Bench Accounting. Who are your clients and what do they come to you for?
Hello, thanks for having me. So we're Bench. I've been working at Bench for almost a decade and have supported business owners throughout that time to navigate their bookkeeping and tax filing needs. Ultimately, we are a bookkeeping and tax filing service. We're focused specifically on supporting small business entrepreneurs that traditionally get left behind by the accounting industry. And there are a lot of small businesses that get left behind. We're currently serving 13,000 small businesses across the US. And I'm really passionate about this space because I get to help people and specifically entrepreneurs. Entrepreneurs are the backbone of our society. Like, you all drive the economy. And what I hear from folks like you all the time is that you didn't start your business because you're passionate about back office tasks that are required by the US government, like bookkeeping and filing your taxes. And the reality is that bookkeeping is a low margin product. Most accountants don't actually want to spend their time doing the bookkeeping for small businesses. So instead, they usually offer a year-end cleanup, leaving you without financial insight throughout the year. So at Bench, we do believe that no business owner should spend their evenings and weekends poring over bank statements, payroll documents, merchant reports, receipts at their dining room table to compile their financials. So we pair a real human team of bookkeepers with simple, intuitive software to do this bookkeeping for you.
So let's just talk a little bit more about specific steps that business owners should be taking to prepare for tax season, but also I wanted to talk about the kinds of like really specific things like deductions they should be thinking about that they might miss.
Absolutely. Yeah. So there are ways to master this system. And you touched on this earlier, like the difference between bookkeeping and accounting. Accounting is this overarching umbrella of many different services, including filing taxes. It could include your payroll, your invoicing. But ultimately, bookkeeping is the foundation that you lie to support all of those other tasks that you will need to do. So the first thing that I tell people is make sure that you have a solid bookkeeping system in place, because you will pay more in taxes than you need to if you do not have a comprehensive set of books that is optimizing every deduction. And it's also really important to know that even if you work with an accountant who will be filing for you, you can't expect them to pull transactions and deductions out of thin air. It all comes down to the quality of information that you are providing them. So every single bank statement, every single receipt for any cash that you've used for business expenses, every payroll report, every merchant report, every loan statement, all of these things matter so that they can be included and optimized from a tax deduction perspective.
What do you see are some of the biggest mistakes that small businesses make throughout the year? I think you covered some, but what are some of the other things either they miss or mistakes that they make during doing with their accounting during the year and during tax season?
Absolutely. So the two biggest mistakes that I see business owners make is missing deductions and then missing some of the deadlines. So there are so many forms and deadlines that you need to keep track of as a business owner. The state and federal deadlines, your W-2 and 1099 filing deadlines, and every associated form that must be filled out correctly, and the fines and fees and interest that the IRS will charge you on those missed forms and deadlines just gets out of control really, really quickly. So if you aren't working with an accountant, and honestly, even if you are working with an accountant, make a calendar, make sure that you are keeping track of every single deadline and every form that you need to fill. And then make sure, whether you're doing the bookkeeping yourself or if you're working with an accountant, make sure that you are optimizing those deductions. Like I see business owners miss merchant fees all the time. So if you're working with a merchant like Stripe or Square or Shopify, they will take their cut of your revenue before depositing that into your account. You need to adjust for that fee. You need to gross up your revenue. Otherwise, you're underreporting your revenue to the IRS, the big red flag. And you want to break out that merchant fee because that merchant fee is actually 100% tax deductible. Similar thing with loans. Many business owners don't know that the interest that you pay on any loan or line of credit, that's tax deductible. So you want to make sure any payment that you're making to a loan or a line of credit, you're actually splitting that transaction apart into how much is paying down the principal balance, and then you track that on your balance sheet, and how much is just interest. And so you want to capture that on your income statement. That's a tax deductible expense, 100% write off.
What's your best advice to someone who is, admittedly says like, I have not been doing a good job with my taxes and I really need to develop a better process because I'm growing. So what would you say to that person?
First, that you're not alone. We have a whole department at Bench that's specifically focused on supporting business owners that are years behind on their books and taxes, and even those who have gotten letters from the IRS, which can be really scary. So please know, if you're in this situation, you're not alone, and it's not too late to get professional help. So the first thing you're going to want to do is get accurate, up-to-date bookkeeping in place, because if the IRS is telling you that you owe some wild figure, and they're gonna guess that it's a wild figure, you actually need to complete that bookkeeping for those prior years to prove that you don't owe as much as they're claiming. You can also always get a tax resolution advisor, someone to negotiate for you on your behalf with the IRS to get that bill down. But the first thing you need to do, regardless of how far behind you are, you got to get your bookkeeping in place and make sure that it's up to date. And then you have a consistent system moving forward that keeps you up to date so you don't fall behind again.
That's great. And that's a great place to leave it. So thank you so much, Ada Vaccaro. We were so happy to have you. And it's great. I think our audience really will appreciate this. Thanks.
Excellent. Thank you.
Oh, I'm so excited to welcome Barbara Thau, who is the editorial director of features on Co. This is a brand new segment with me and Barbara. We will be talking about her hottest, most exciting trend stories that we have on Co each month. So Barbara, hello.
Hello, Jeanette. I'm so happy to be here with you.
So we picked out 3 stories that you recently published on Co, and I wanted to just highlight each one. So the first one I wanted to talk about is this story you have about the services that Amazon is promoting for small businesses, and it's talking about solving all these like big pain points for small businesses. So can you talk a little bit about what those pain points are?
Yes, and I have to say it's really a testament to the power of small businesses. So just Amazon 10 years ago, most small businesses were resellers, and now they're bona fide brand owners, and they represent like 60% of the products sold on Amazon's site, which is huge, versus 40%. So Amazon said, we need to figure this out. We need to solve the biggest pain points. The biggest pain points are supply chain, product listing, and product developments. And that's what they did, and they leaned into that.
So when you say that that a lot of the small businesses selling on Amazon are actual brands versus resellers, what does that mean?
That means that they're actually not selling existing products, but they are their own brand owners. So they will take, the total product development life cycle. So Amazon said, since these brands, these small businesses are now actually producing and manufacturing products, we're going to take the whole supply chain and do it for them, even if they want to grow beyond Amazon. So If a small business wants to sell on Walmart, Amazon will help them.
I think we're going to see more of this, don't you, across a lot of different companies providing these services?
Absolutely, because these small businesses are the little engines that could. They're providing this giant market to the big businesses. So they're catering to them, which is so interesting. This sort of democratization.
Yeah, it really is. Oh, I love that democratization of the playing field. Okay, so let's talk about this next story, which the headline is Retro Rewards, how businesses are monetizing the nostalgia trend. So Barbara and I both, we're very nostalgic for the old days, right? I love vintage. Barbara's very nostalgic for old New York. So let's talk about this article. Super, super interesting in all the ways that businesses are kind of monetizing what's apparently not just us, Barbara. Apparently everybody's longing for the good old days. So can you give some examples of what we talk about in this article?
I was thinking so much about this, and our reporting by our amazing reporter Joan Verdon just dug into this topic. And what I really thought about was the Grammys the other day completely encapsulated that. The hit song "Fast Car" from 1988. Tracy Chapman, she came on the stage, she sang it with Luke, I can't remember his name right now, Luke, I have it, Combs. And this was a moment of culture and commerce. The 1988 version is now the number one selling thing on iTunes, song on iTunes. So it's this sort of so the nostalgia trend is this reinterpretation of the past. And they're tapping into this mass affection, which was so amazing. And we're seeing it with Barbie Core, right? So, and we're seeing it with Hostess Twinkies, so retro snacks. And once again, a new spin on an old or vintage product, a service, an entertainment vehicle. We have the Furby toy. Remember those tech toys, those Furby things, whatever. Mm-hmm. They have they got a fuzzy makeover, literally a fuzzy makeover. Bloomingdale's iconic bag, right? Bloomingdale's iconic brown bag that was like as you said, the first It bag, launched a limited edition collab with, they made it an event, the 50th anniversary, with Helmut Lang and Economy Candy, the old school New York that we profiled, a Lower East Side candy store that's like literally 100 years old. And brands are leaning into this. And as we were talking about how, Gen Xers like we are, and as well as Gen Z, and now the next ones, the alphas, will be nostalgic for things that they didn't even live through. So it's such an opportunity.
Yes, we were talking about this. So first I want to just make sure no one missed that you called it nostalgia, which I asked you if you made up. And you said you did not make it up, but I don't know. I think you might have. So we're calling it nostalgia. And that Bloomies bag, which I don't know if everyone knows because it's such a New York thing, but it's just that plain brown bag that just said Bloomingdale's or Bloomies?
Yes.
Bloomingdale's.
I think it said Bloomingdale's.
Yeah.
No, it said brown bag.
Yeah. The other story I wanted to talk to you about is this really cool beverage company called Wild Wonder, founded by someone named Rosa Lee.
This is a huge market. I think the probiotic and prebiotic drink market is a $19.3 billion market, but it's a crowded market. And she was tapped into her business school bona fides and her investment banking bona fides, and she was so smart about how she scaled it. Even the failure, she learned from the failure. She had glass bottles, and then she realized it wasn't good for the supply chain. She turned to cans, but in addition, she differentiated in the market. So the market, she came up with tapping into the healing tonic recipes, herbal remedies of her grandmother, her Chinese grandmother. And so it's adding this, really differentiating in that space, which is a super crowded space at retail. And she, there was a grassroots element to this. She knocked on doors of 100 grocery stores. And now she is she has sold over 5 million cans in 40 states and is carried in over 3,000 retail doors, from Wegmans to Whole Foods, like you said. So really a story about tapping into a market, differentiating in that space, and scaling smart and learning from your mistakes.
And there's a nostalgia element again, because she was really relying on her grandmother's recipes. So it all comes around. Barbara,
Totally.
I love you. This was great. I really think that we could do this for an hour every month, but this is all the time we had. So I want to say thank you for joining us. Everyone can read. We'll be putting these articles are right under where everybody's watching right now, so they can read them. And I want to say thank you.
All right.
Thanks so much, Barbara. Thanks. Bye-bye.